Welcome back to Yahoo Finance Live. No question, some of the more traditional retailers have struggled to adapt during this pandemic. But when you take a look at one particular ETF, it does point to the resilience we've seen in the retail sector. Spider's S&P Retail ETF XRT up 75% over the last 12 months, outperforming the S&P 500. Let's bring in Michael Baker. He is D.A. Davidson's Senior Research Analyst. Michael, it's good to talk to you today. Of course, the side note to all of this is that when you look at XRT, there's 20% GameStop holdings there. So you've pointed out that, look, the meme stocks and the move around the Reddit trade has certainly provided a lift. But in the broader picture, what does this tell you about the resilience we've seen in retail despite these COVID restrictions that have significantly limited business?
Yeah, well, a lot of the retailers have been able to take advantage of this environment, and particularly ones that sell products related to the home, consumer electronics, Best Buy, for instance. And it's what we did this morning in our report as we looked back. Really, we think stocks peaked pre-COVID February 19th of 2020. And so this Friday was a year anniversary of that. We thought it was interesting to see how resilient the S&P 500 has been, but retail even more so. And you're right, a lot of that retail XRT ETF has been influenced by GameStop and others. But even if we just look at the individual names, 75% of the retailers that we cover have outperformed the S&P 500. So a lot of these names have been able to take advantage of the COVID situation to generate better sales and profits, and that's shown up in their stock price.
That includes, some winners and some losers in there that have not necessarily seen those big boosts in the stock price. And interesting to see, the activist investors come out and focus in on Kohl's, saying that they've lagged kind of the rest of that recovery we've seen in the retail sector. So what would you maybe estimate as baseline as good in navigating all of these concerns around the pandemic and those that have outperformed good, and what you're seeing from those?
Well, so a lot of it has to do with the product categories that they're selling. And so apparel, in particular anything outside of leisure apparel, has not performed well during the pandemic. And a lot of department stores, have a lot of product in those areas that customers just have not needed or wanted during the pandemic. Department stores are struggling pre-pandemic as well. But when you layer in the idea that the products that they were selling weren't what customers are looking for in this quote unquote new normal as we all stay at home, I think that leads to a lot of the underperformance. Ulta would be an example there as well. Although we do think Ulta now is poised to reaccelerate their sales as the economies and markets start to reopen. But the guys who've really done well, it's pretty simple, are the ones that are selling products that customers want. So that's outdoor related, that's including sports related, consumer electronics. And so really a lot of it has to do with how well positioned they are relative to what customers are buying. Also, some of the bigger retailers like a Walmart or a Target, not only they benefited from those product categories, but also from the idea of trip consolidation. And so you can sort of get everything you need at a Walmart or a Target. And so that makes them, that helped them generate a lot more traffic this year than other retailers.
The common thread that we have seen between the smaller retailers and some of those big box names that you pointed to is the growth that we have seen in e-commerce. And it feels like a lot of the retailers who have been able to adapt in a significant way have come out big on the back of this pandemic. Post-pandemic, as we look to people sort of starting to resume in-store shopping, is that still going to be a significant driver for some of these names? Or do you think investors need to be looking at them a little bit differently aside from the digital footprint?
Well, just taking a step back, this has been years in the making, and retailers years ago were sort of in denial about the power of e-commerce, but slowly but surely have understood the benefits of their omni-channel model and have been investing in that. And really, you saw that pay off this year as a lot of these bigger retailers were poised to take advantage of the growth in e-commerce. As we look ahead, we suspect it'll sort of meet in the middle somewhere. The in-store sales will get better. The e-commerce sales will continue to grow, but probably at a lower rate, continue to take share in terms of the overall penetration, but not at the same rate that we saw in 2020. But still, those retailers with the omni-channel capabilities, we think are just still going to be best positioned to take market share. We put out a note this morning that looked at overall e-commerce sales. This is based on the quarterly Census Bureau numbers that come out. They came out last Friday. And e-commerce is now a full 20% of overall retail sales and more than 50% of the growth.
Yeah, it was interesting. I like the way that you looked at it in terms of performance during the stay-at-home phase when people are expecting this pandemic to last longer, and the reopening trade as we shift back to normal. And you kind of do the plus minus of that. And you point out a lot of different names that have some wide gaps. Wayfair might be one that really surged when people were buying furniture at home, and now as you think about having the option to go back to normal stores, maybe has less upside. But what would you highlight from the list in terms of those that are best poised? Because you can kind of look at it two ways, remaining upside or potential momentum. So how are we supposed to look at the list as your best recommendations?
Yeah, I mean, names that we like are those that are poised to take advantage of the reopening. And so Ulta would be a name there. But we also think you want to look at it. Which companies have invested what we're calling the COVID windfall, where they've seen a lot of sales and profit upside during the last year? What companies have invested that windfall back to make the company a better company going forward than they were when we started this pandemic? And names that come to mind there would be ones like BJ's Wholesale Club, which is going to be able to reaccelerate their growth, their store growth, in part because of the COVID windfall. Dick's Sporting Goods, we think is their vendor relationships with the likes of Nike and Under Armour is much improved now than it was prior to the pandemic. Walmart and Lowe's investing in their supply chain, and we think they're poised to continue to do well. So there are a number of ways to look at it. There are the reopening winners, again, Ulta, but even ones that did well in 2020, we think can continue to perform well even as economies start to reopen.
Okay, interesting report there. Michael Baker, D.A. Davidson, Senior Research Analyst. Appreciate you stopping by today.